Okay, hello traders, and welcome to our final part in our 7-part video series on strategy construction. Today is part 7 out of 7, and what are we going to be looking at? We're going to be looking at the TS components, where we're going to bring it all together and give you the overall picture on strategy construction and to build a sustainable, scalable, reproducible strategy. This and more in this trading video. Hi traders, thank you for joining the Master of the Markets team and supporting us in our mission to spread the truth of trading and help you achieve consistent trading performance. It is Stu Naupan here, founder of Master of the Markets Elite Trades Conference and the Traders Open Day. So here we are, traders, on step 7 of the strategy construction. Now, some of you have been asking, okay, where do I find all the previous parts of this video series, Tiru? You can easily go on to, I'll quickly say this and I'll quickly dive on to the topic for today. You can quickly follow us on Master the Markets 2010. We'll be going on since 2010, that's why 2010. And you can find all these videos under the streams section, and where you can see 7 steps for strategy construction, the RM component, part 6 out of 7, 5, 4, and everything else. Okay, and you can also see under the ideas section all the live trades, ideas, and everything that we're taking in real time as well. Okay, I'll go on to the charts in a minute after I've covered some of the material, and then we'll put all this information in real time. Okay, a couple of things I also do need to tell you. I think I'll talk about that later as well. One is on the 5-day video course that we have. You can take a look at that later as well. I'll point you in the right direction. Actually, the link is over here, but anyway, we'll come to that in a minute. Now, swiftly moving on to the TS components on step 7 today. Taking a look at the first one. So in terms of the TS components, traders, the first thing that we are looking at so far, we've covered the S component, right? The S component. Now, what was that? That was the strategy component, the strategy, right? That was all what this was about, the strategy construction. Now, as you know, as we covered through strategy construction, it has got 5 components to it. Is it not, traders? Yeah. And the 5 components is, if I were to bring this up over here on the script sheet template, which I showed you guys as well, first was the concept objective component, right? The concept and the objective of the strategy. The second component was as some of you already guessed it right and typing it in already and messaging us and emailing us, is the entry rules. Okay, and that is the entry rules that we were talking about, the entry component. And then the other one was what was the other one? Yes, some of you are getting it right. Is the stop loss component, right? And then the fourth component out of the strategy component was the target component, and finally the last one being the risk management component. Now, we covered all of these, traders, in all our previous parts and went into much more in detail as well. So highly recommend you guys to go and watch the previous parts to this. Right, so now today we put it all together and we're talking about, if I were to come back to here again, what are we really looking at? We are looking at the strategy component, which you've looked at, but we're saying is only 1/3 out of the entire trading system components. The TS refers to the trading system components. The strategy component only comprises of only 1/3 of the whole entire trading system. Now, what does that mean, Tiru? That means is there more? I mean, the strategy itself looks like there's so many components that we need to cover, we need to think about, and all of that. So, are you saying that there's so much more then as well? Yes, there is, traders. And you see over here, if you take a look, what are the other two? Is the natural question that you will definitely ask yourself. But if before I come to that, the two more components, before you go live on your strategy and put real money to it, there are 6 steps first for publishing a strategy. There are 6 steps first for publishing a strategy. What are they? So if I'm going to go back into the live charts very quickly over here, Let me just take a look over here. So if I were to go back into the charts, so before we start to take any kind of trade, just now I was just taking a look at Bitcoin as well. We're doing a live trade on this in real time as well. But before I publish any strategy where I'm taking live trades and all of that on this Bitcoin, for example, whether this weekly bottom will hold and all of that, and using other indicators in combination as well to make my um, decision and consideration on entering and how to manage that trade, I must have gone through the 6 steps for publishing a strategy. And what are those 6 steps? Now, let's go through that very quickly. Now, the 6 steps are traders. The first step is having your crib sheet. Now, this is where we went through all the 5 components, right? Which is what I spoke about just now, right? Concept, objective, entry, stop loss, target, and then risk management. The next thing is after you've written all of that, you must go and test it, right? In back testing format. But the important thing about back testing is you shouldn't look at the data before you test it. So all these rules must have been written out first. Okay. If you want to modify it, let's say after maybe 20 trades of testing, then go and modify it, but don't look at the next 80 trades you're going to test. That's how you do it. All right. So that you don't go and curve fit it. Now, after that, traders, then you go to see if it's needed to optimize it or not. After you backtest it, if you're not getting your favorable results, then you go and optimize it, which I said. How you optimize the script sheet is that you don't look at the next 80 trades or 20 trades that you're going to test it on. Okay, so that's how you do it. Don't look at all the trades and then go and optimize it. Yeah, so that this will help you towards building sustainable, scalable, reproducible strategies. Because you see, a lot of people who have backtested for many years, right? They will run a lot of high, complicated algorithm kind of testing for 20 years. But the problem is, suddenly when they trade it for the next year onwards, it doesn't work. It doesn't work according to even their drawdown perspective, which I told you on the previous video. What are the types of drawdowns you need to take a look at? The three types of drawdown. So all that doesn't start to work. So the optimization has got to be done very carefully without looking at future data or past data that you're testing. After these 3 steps, script sheet, backtesting, optimization, then you go and do it on a forward testing manner. If you want to be a bit conservative, do it on a simulative, do it on a demo account first of forward testing, okay, to see if it works. And that's how some funded trader programs are as well. They make you do it on a simulated account to see if you can prove to them, okay, whether you're able to consistently execute. Now, once you've survived through the simulated account at least about 3 to 6 months, and then what I would then suggest is go and trade it on a small live account. Okay, small account is anything up to $100,000. So it can be anything from 2,000, 5,000, 10,000, whatever it is, up to 100,000. And after you have gone through that and putting through about 6 months to 1 year of live trading on it, then you go on to scaling out even more higher, anything from $1 million upwards on a big account. That's what I would suggest. Some of you might say you're happy just over here at this point, just stick with that up to 100,000, 200,000, whatever. You don't want to get more institutional money. That's totally fine. Just do that. Even if this is your own money that you have capital, that's fine. Take that on as well and just trade with your own personal money. You don't need to take on and scale with other people's money as well. That's totally fine. So this will be the 6 steps to publishing the strategy before you go live and you start to trade on live accounts like what we are doing over here and showing you in real time what it would look like taking the trades in real time. Okay, that's what I would say. That's what gives us the conviction as well. We've gone through all this process and steps. Right. Now, after you have done, which is still, remember, this is the first out of the 3 components of the trading system. Okay, the strategy component, which already entails 7 steps. After that, then you may ask, okay, Tiru, what are the other 2 components? Okay, you only talked about, see, saying now strategy is the first out of the 3 components of the trading system. What are the other 2 components? Now, the other 2 components, traders, as you can see, the strategy component is the one out of the 3. The other 2 components, some of you are already messaging it in, already are typing it in. The second part of it is the psychology component. The psychology component, of the trading system, and then the final one is what we call the optimization component. Okay, and then it goes on a feedback loop, and then this is what is used towards achieving consistent performance, okay, or consistent results. Okay, this I would say is the other two components of the trading system. All right, now traders, swiftly moving on and taking a look at this. Now the psychology component, what is that necessary for? It is the glue that actually binds the strategy and the optimization component, or the results finally that you are achieving. But the psychology component is necessary towards only one objective, which is the CE part of it, right? Which is the what we call the consistent execution. Consistent execution. Psychology component is necessary for consistent execution. Now, if you do not consistently execute your trades, now if I go back to here, if all these are not based on a structured framework which allows for consistent execution to occur, that means to say that if your strategy rules, you see, for example, even on gold, as we are taking a look over here, if your strategy rules that you built it on, your strategy component, right, which involves 7 steps towards strategy construction, your strategy rules based on the 5 components which I talked about, does not or is not based on quantified rules, then how can you consistently execute it? Or even if it's based on some principles which are a bit subjective, how can you consistently execute it, right? You don't have a structured framework. So that is why, and consistent execution, some of you might say, okay, give me the rules, I will execute it, no problem. No, what you're underestimating also is the stabilization of your emotions. Why must that strategy continue to work? Why must that strategy continue to work? Your intellectual conviction must be there on the rules that you have set out. And that's what Ray Dalio always keeps asking. And Ray Dalio, if you have not known him, he's the biggest hedge fund billionaire trader, right? He's got 160 billion under asset management. He's got one of the biggest hedge funds in the world, if not the biggest, 160 billion. And he keeps saying you must keep asking, why must your strategy continue to work, right? And towards that, traders, even if we give you the rules for the best strategy in the world, your psychology must be ready to trade it. And the psychology, what I mean is, psychology is an integration between your intellect and your emotions. Your intellect might be totally agreeable, why must the strategy continue to work, and you know exactly why you have put the rules together, but because of our past bad habits or past memories of the losing trades, that might affect you pulling the trigger to take the next trade, which might be the biggest winner. Okay, so you must constantly do the reminders. So to make the emotion stable, I mean, there's a lot of ways to do that. Just give you an overview is reminders. And how can the reminders come true? It's either through through the eyes, through either watching something, or reading books, reminders, or listening to podcasts or affirmations where you keep reminding yourself through listening as well. All of those things, and through meditation as well. All these things, a lot of techniques that you can do to ingrain into your psyche and to feel it that not only is it intellectually sound, but I really feel and I believe in my strategy that it will continue to work in the law of numbers through the consistent execution of my trades. So that is the second component. So it's a lot of work. A lot of people actually underestimate the amount of work that is actually required, traders. Okay, so now going back, so now you understand the importance of the consistent execution. That is the glue, right? That is the glue between the strategy and between the, so psychology sits in between the last part, which is what I'm going to speak about, which is what I told you about, which is the optimization component. Okay, now the optimization component is where you look at your stats. You look at your stats review, right? Your stats review, where you start to look at, is my strategy still continuing to work as it is meant to be? And this is where we usually will show you And in terms of what we have achieved as well, let me just see if I can pull this up very quickly for you guys, of 2022 results and 2023 results as well on the Excel spreadsheet. So on 2022, before I go on 2023, you can see, right? I mean, we had 3 strategies, and each of these strategies, right, rather than some of you might be thinking, which I don't mind, that we punch all these numbers in. No, each strategy is, every trade is locked in real time, right? Every win, every loss, every single thing. Our trading team does that, which has been inspired by our own clients as well. And the lift-off strategy, the 3 strategies, every single trade that we've taken, every single win, losses, everything is recorded down. So in 2022, it was an easy ride in the park. This is what I'm talking about in the optimization component, yeah? So we keep monitoring every single thing as it hit our maximum drawdown. This was on the previous videos on, I believe it's number 5, part 5 out of 7, where we talk about the stop losses and the drawdowns and everything that we got to take a look at, and risk management as well. So over here, what we look at, traders, is not the, all the profits that we're accumulating. Okay, yeah, we can beat ourselves about it, and we're doing a good job in 2022. But remember that what we are really looking for is the drawdown, right? As it hit our maximum peak to valley drawdown and all of that, trade by trade drawdown, loss clusters and all of that. This year was easy because every month was profitable, and we ended up with 73.34% profit at 1% risk. Remember, this is all end of day strategies. I'm not talking about any other strategies yet, and just on a number of instruments, about 9 to 10. You can always expand it to make even more if you want to, if you're looking into that. But for institutional, to manage institutional money, 73.34% is really, really good amount of profit or performance. However, this year, traders, as professionals, we never look at the profitability. We always look at the drawdowns. But however, this year, as that year came to an end, we always keep thinking, okay, how will the profits rearrange itself? How will the losses rearrange itself for the next year? How will the drawdowns look like? What should I be prepared for? This year, look at this, right? For 5 months, we were in drawdown. 5 months, we were in drawdown. Cumulative, about 11.55%. Now, if you do not know your drawdowns, when it comes to your optimization component, you might start to think, okay, I should stop already now and go and keep optimizing it. No, you shouldn't. The most important thing in the last component of your trading system component is to know when to stop or when to continue. Right? Very important. But if you do not know your peak to valley drawdowns and all of those 3 types of drawdowns which we spoke about, I think in part 4, part 5, you wouldn't know when to stop or when to continue. So when you come back to this, when you look at our results over here, what gives us the conviction to carry on? Because the maximum drawdown was not hit. But for one of the strategies, it was hit though. For 1 day exit, that's why we stopped it here. On the 1 day exit strategy, right? And everything is recorded down here. All the profits, all the wins, every single thing. Trade by trade. And why do we do that? Because as professionals, we need to track it as the third component of the trading system. And you saw that we stopped it here, went for a review on this strategy because we know when to stop it. And over here on the 2, we continued on with it. And look, right, we had the biggest months in June and July, where we had 7.31% in June, and in July we had 12.27% and carried the curve up to 8.03%. You see, in the beginning, if you take a look, right, according to these cumulative results, if this was a zero line, it went up to 4.29, right, came back down to 4.65, and then it went up to 1.95, yeah, and then after that, then went back further down, took out this low to 7.48, went back further down, right, to 11.55, then it came back up to 4.24. It just took out this low to 4.24, right? Didn't take out this high yet at 1.95 here. And then after that, in July, it shot up to 8.03, took out this peak as well. That's how this curve looks like on the cumulative equity curve point of perspective. Now, traders, Why am I telling you all of that? You must know your drawdowns, because if you do not know, you will have stopped it and going to optimize your strategies even more. That's why the optimization component is very important um, in knowing when to stop or when to continue. And you won't be able to look at any of this if you don't have a quantified strategy based on the 5 components I spoke about before and looking through the 7 steps for strategy construction and having the right psychology to consistently execute it. Then you won't have any validative stats to make a conclusive validative decision on whether to stop or continue with the strategies. Okay, you must all have this. This is what gives you the clarity and the confidence to keep going forward. And in fact, let me let you know a secret. I was talking to one of my traders from US in the Oxford Tower over tea, and we concluded the conversation with this, which is what I'm going to tell you. The biggest money traders, whether you are doing an automated trading system or manual or hybrid or both, the biggest money which we concluded over tea with the other trader in Oxford Tower was that the biggest money is made when you know when to stop a strategy or to continue on with it. Mainly when you know when to stop. When you know that the strategy has failed, you stop it. You make your millions, but don't give it all back to the market. Maybe because after you made 5 million, it comes back to 4.5. You know when to stop it because it exceeded your drawdowns. You must know all of this right from the beginning. This is what gives you the clarity. Okay, traders? Right. So that's on the third component, the optimization component, which helps you know when to stop or to continue, okay, with your strategy. Okay, traders. Now, finally, this then makes me come to the final part, which is whenever you have a smart money framework, okay, which is what our smart money indicator gives you, right, which helps you with, you can trade with conviction because you will know the exact probabilities that you're trading with. As you can see over here on gold, I can know what the probability is for this trade to take out that low and to continue on further down, right? Or to make a turning point over there. By looking at my open equity tables, which we have taken a look at, and understood how to read that table on our other stream on 7 steps for consistent trading performance. Go and check that out as well. So traders, when you have the smart money framework, which is what currently we are taking a look at on the GBP USD as well, right? We were taking a look at whether this bottom is going to hold on this big volume spike on the daily, then to finally become a weekly bottom, okay, to find a weekly bottom and keep on going higher, then for the arrow to pop up here. Now to do that, we have entered now on the 4-hour bottom here, right, on a volume spike here as well, as it confirms. So this is where the blue line is at 1.2643. Now 1.2643, let's see if that 4-hour bottom goes on to confirm a daily bottom and finally to become a weekly bottom. And from then on, traders, I can then look at my open equity table to see when I need to come out of it, right? If I go on the settings over here, show the stash chart, and if I take a look at the amount of pips and all of that, let me just put that in, and you can take a look very quickly on the table. Once it confirms it, I can take it all the way to at least the 50% mark, which is 250 pips after I get a dot onwards to take a look at that, right? This is what I can be taking a look at as my first point of taking out some profit. This is how, when you take a look at the whole picture, you will start to gain confidence of the entire smart money framework, because now you're looking at it from a quantitative perspective, which helps you towards consistent execution and realize your final thing on statistics as well towards the optimization component, when you know when to stop or to continue. All right, traders, I believe that's pretty much what I wanted to cover. And in terms of, I know you've been getting a lot of queries on how you can get hold of the smart money indicator. You can look at our signature at the bottom of our ideas and all of that. In fact, below the stream as well. And you can take a look on where you can find out more about that. Let me just quickly just pause that one. You see, for example, on the signature here, you can take a look, find out more on Sparkman Indicator. You can go on that link and you can find out more about that. Okay, so I'll leave you guys with that one. What is other things I do need to tell you? Yes, for those of you who want to explore a little bit further on putting a strategy together and putting the understanding the entire framework, as I said, two things you can must I highly recommend you to look at. One is under the streams, where I said 7 steps for strategy construction. And if you want to get more insight, definitely look into, highly recommend our 5-day video course over here, right? 40 years of cumulative team experience and trophies collected research. Take a look at that. You can put that link onto here. If you do that onto the on the URL, and then it will bring you to Trader Starter Pack, where you pop in your name and email address, and then you can take a look at the 5-day video course. And also that will also make you in touch with us on previous and upcoming events and everything that we do as well. We can stay connected and everything, and then you can get in contact with us as well. All right, I guess that's pretty much that from us traders on this 7 steps for strategy construction. Thanks for staying in tune. I know we've been getting really nice emails and messages about you enjoying this wealth of knowledge. If there's any questions at all, also reach out to us as well through TradingView, and then we'll be more than happy to answer those questions. I think if there are no other questions, then I will bring this to a close. And as we always say, traders, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.